Hey everyone, it's Tuesday morning, January 14th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Cela, here to break down yesterday's market action in just 2 minutes. Let's get started. Before we dive in, a quick note, today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. So, it was another mixed day for the stock market yesterday. The Standard & Poor's 500 ended the session up by almost 0.2% after being down as much as 1% earlier in the day. The Nasdaq, though, slipped by 0.4% as most big tech names struggled. Nvidia and Apple managed to trim their losses by the close, but overall the Magnificent Seven tech giants had a rough day. Meanwhile, the Dow Jones did better, rising 0.8%. The index doesn't have as much tech exposure, so it dodged some of the volatility we've seen recently. This choppiness comes after Friday's plunge wiped out all the year-to-date gains for the major indexes. The December jobs report spooked investors by showing a stronger-than-expected economy, which has everyone worried the Federal Reserve will keep interest rates higher for longer. And speaking of rates, the 10-year Treasury yield climbed even further, hitting 4.8%, a 14-month high. At the same time, the dollar surged to its strongest level in 2 years, putting pressure on currencies like the British pound. As of now, traders aren't expecting a Fed rate cut until September at the earliest, and they think we'll only see rates lowered by 30 basis points in all of 2025. That makes Wednesday's Consumer Price Index report a key event. Inflation is still far from the Fed's 2% target, and markets are on edge about what the numbers will show. Elsewhere, oil prices were another hot topic. Brent crude briefly hit $81 a barrel, and West Texas Intermediate settled just under $79. This comes as the U.S. imposed tougher sanctions on Russia's oil industry, which could tighten supplies to China and India. And finally, Moderna had a brutal day, with its stock plunging 16%. The company slashed its 2025 sales forecast by $1 billion due to weaker demand for vaccines. That's your quick recap of yesterday's market action. Thanks for tuning in to Capital Markets Quickie. I'm Endrit Cela, and I'll catch you tomorrow. Have a great day, everyone. Cheerio.